Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This Simply Stocks, and I'm here with another video. And this time's video corresponds to a small cap pick from my end, which has produced decent numbers, and the stock is down from the top, and so is coming at reasonable valuations. May correct from here, but over the next 5-10 years can become pretty big. I believe that the business of the company could be something to really look upon. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should there with their own due diligence and research, and I'm not a member of the NSE and BSC. I'm not a portfolio advisor, and whatever decisions with respect to investments or markets you take, kindly do consult your financial advisor before doing that. Before I talk about this company, a small request: kindly support me on Patreon. Once you do that, I'm going to help you ask me questions, seek out answers in greater detail. Once you get the membership, you will have access to my portfolio, my watch list, a number of podcasts on discussions on domestic and global economies, a long-term pick from my end on a monthly basis, every 2 weeks basis, and whatever queries you're having, I'll be more than happy to answer that. So the links will be in the description. Now, in order to discuss about this company, we need to go to the screener website, and the company in question in here is ZAGGLE Prepaid Ocean Services, a 5,000 crore small cap company, which looks pretty decent in my opinion, especially after the correction from the top of 600, around 600 it was trading at, now trading at 367 at a PE of 51. So just to give you an idea as to what the business does. Basically, Zaggle builds world-class financial solutions and products for the corporates. So in a nutshell, what the company does is it provides prepaid cards and credit cards for the company to help them reduce spends from by the employees. So if you, for example, look at a scenario where the company spends on travel of employees for say corporate travels or other spends in which they stay in hotels or spend on you can say transport, etc. Then what used to happen, even my days when I used to work, is that you need to probably note it down, all your spends, keep all your bills, and then redeem all that you can suspend from the company by submitting those bills, etc. What Zaggle provides is a seamless solution to that by providing a card or a you can say a system, an electronic system, a digital system in which all this data of employees moving about from one place to another, or spending on food, or spending on staying in particular places, all those kind of spends are recorded real time, and the managers know it real time as to where the spends have been. And probably if you need approvals are given straight away, and those spends are recorded so that they are redeemed efficiently. By that, what happens is that the efficiency becomes even better, and the company is able to save a lot. So Zaggle provides at least two kinds of such things with prepaid cards, and they also provide credit cards for their employees, so they can spend through the card for the company, and then eventually Zaggle, the company itself, pays the credit card bills, because they would have an understanding as to how much spends would be done. By that, they can check the spends. So what happens is that those credit cards have would have a particular limit for the month or for that trip, and so the employees cannot overcharge or write anything that would seem you can say suspicious in terms of the spends that the employees are doing. So on the employee front, on the employer's front, this is a very good aspect that is being provided by Zaggle, and they have a number of clients, and this client list is rising. Plus, the retention rate of these customers is extremely big for Zaggle. It's around the attrition rate is around only 2%. The key customers are Tata Steel, Greenply, Hiranandani Group, etc. Banking partners are Kotak, IndusInd Bank, SBI, and Yes Bank. So they have a good network of you can say banking partners as well as clients that they cater to. In terms of revenue split, they have the software fee, which is 4%. That's how they earn. Program fees, which is 42%. So they have, this is actually a software as service basis, SaaS as we call it. And here the basic or the most expense that a company would be doing is on building that software. After that, once the software is built, the fixed cost is extremely less, and then you eventually get the money, or whatever money or revenue you're generating, most of it just trickle down to the profitability. And that's how the profits have increased for Zaggle over the years. Propel platform revenue is around 54%. That is what includes your prepaid and credit cards that Zaggle provides. So that's how the business of Zaggle is. 5,000 crore is the market cap, currently trading at 3.5 times sales. If you look at the numbers are pretty strong. In the June quarter, what they did is they did around 331 crores in terms of sales. So if you look at even consolidated numbers, the numbers are pretty much the same. 332 crores in the June quarter versus 252, so a growth of around 31%. Operating profit grew from 22% to 22 crores to around 30 crores and remained stable. The margins at 9%. The growth of operating profit was around 35-37%. Eventually, the net profit has grown by around 50% with the other income increasing. So that's how the numbers have been. Why the stock is down? Probably because the analysts expected a better growth. They were looking at a 35 to 40% kind of a growth. That's what the management had guided for. But here we have come out with, or the company has come out with around 31% growth. So probably a little bit less delivery in terms of expectation. What the analysts were having, they were having expectation on 37-38% sales growth, which has come down to around 31%. But having said that, the valuations have also now curtailed substantially from where it used to be, say about a year back or so, say about say about a year and a half back. So in March of 24, they were trading at 123 times. In terms of PE, it went to 105. Then it remained around 90 to 100 for longish period of time, and currently the PE has shrunk to 51. Now what I believe is that since the company is growing at 30%, 35%, a PE of 50, I won't say that it is highly justified, but now the valuations are pretty reasonable. The price of around 360, 370 rupees is not very expensive at all, and that's why I picked up the stock. It can go to around 335, 340. No one can say that it cannot fall. There could be a 10-15% fall from here, but if the growth continues in terms of sales and profitability, things should look up. What the management has talked about is by FY26 they would double the sales from FY24. So FY24 they did 775 crores. They are looking to do around 1500 1600 crores by FY26, and I think they are on course, because if they do 30% sales growth on 1300 crores of FY25, then we are looking at a scenario that the company should be able to easily achieve their target. 1690 crores is what we are looking at. So well beyond 1600 crores they should go by that point of time. So they are doing pretty well. It was the valuations that was the biggest enemy for the stock at around 600, 550, 600 levels, because at that point of time the stock was trading at somewhere around 80, 85 times. Now it is trading at 50 times on current earnings basis. And now If you look at the balance sheet, they have a borrowing, but that has reduced over time. It's around 20 crores, so not a lot. Reserves have increased substantially. Things are looking fine on the balance sheet front. Cash from operating activities is positive after being negative for a couple of years. So that's pretty good. Good cash conversion cycle has also reduced from around 82 days to around 60 days. If you look at the ROE of the company, it's around 9-10%, which is not really great. And that is another reason why I would believe that the stock is under pressure, because ROEs of around 20 and northwards of 20 to 30% is regarded pretty strong. Here we have it around 10%. So probably that is one thing the company needs to probably work on. In terms of promoter holding, that has increased over time to around 44.2%. FIA holding has remained strong at around 8.5%. DIA holding got reduced in the last quarter by around 2.5%, but FIIs are holding the stock firm. So a decent FII DII holding. Large investors are in it. Stock is down from the top by quite substantially, from around 600s down 40%, in that terms 35-40%, although the numbers are coming in. So I would say this is something to really look at from a long term point of view. So this was my video on ZAGGLE Prepaid. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.